Our first objective in Chapter 4 is to prepare an accounting worksheet. Now, in this condensed course, you're not going to actually have to do a full-blown worksheet, but you'll need to pull information from it in order to produce financial statements. So let's just do a quick overview of the accounting worksheet. And this is a continuation of our discussion from the end of Chapter 3. A worksheet, we said, is an internal summary device. It is neither a journal, nor a ledger, nor a financial statement. A good way to generate a worksheet would be to use Excel. Okay, so the steps for a worksheet. We know from Chapter 3 that we enter all of the accounts that are being used, meaning that have a balance, on the left-hand side. And in the first two columns, we label that the trial balance with a debit and a credit column. We list all the account balances. We add up the debits to make sure that they're equal to the credits. Next, we enter the amount of the adjusting entries in the next two columns, titled Adjustments, and it also has a debit and a credit. And you'll notice that we key off the adjusting entries by letter, or some sort of a system, to make sure that we've recorded all that we've written down, all of the entries we've recorded in our journal and updated to the ledger. Okay, what we do is we compute each account's balance, adjusted balance, by combining the amount in the trial balance column with the amount in the adjustment column. We then enter each account's adjusted amount in the adjusted trial balance column. So when we move on to our fifth and sixth columns, we'll title those two Adjusted Trial Balance, and we'll extend the balances starting from the left and carry them over to the right. Okay, so if an account wasn't adjusted, like cash, that would come over as the $4,800. Remember, we never, ever, ever adjust the cash account through an adjusting entry. Okay, so we'll just extend all of the balances of the accounts. We'll add up the debits, we'll add up the credits to make sure that we're still in balance. Okay, so next what we're going to do is to separate the revenue and expenses from the assets, liabilities, and owner's equity. So every account above the line goes to the balance sheet, every account below the line goes to the income statement. Okay, we then extend our worksheet for 4 more columns. The first two are titled Income Statement. We'll just slide over the income statement numbers to their respective columns. We add up the debits, we add up the credit, and we see we've got a difference here. The $6,500 of service revenue minus the expenses will be our net income. You'll also see there's a difference between the amounts in the balance sheet for debits and credits. Okay? So, we know we need to make each pair of columns match, equal each other on the worksheet. So what we do is we subtract the $2,900 from the $6,500. We come up with net income of $3,600. Okay, so the amount needed to balance the debit column is the net income, $3,600. The amount needed to balance the credit column on the balance sheet side is also $3,600. Okay, so the debit amount on the income statement is equal to the credit amount on the balance sheet. So that's what our completed worksheet would look like once we put in the net income and we have the credit over here to the $3,600.